Hello, everyone, and welcome back to Grumpy Monkey Trading. My name is Michael, and this is another episode of predictions for July 30th through August 3rd. All right, so what's the point of all these videos? Well, I'm trying to predict the future, working on some algorithms and whatnot to see if I can predict 1 week into the future a decent range of where a stock can and can't get to. Our stocks this week are Applied Optoelectronics, Disney, and Netflix. So let's take a look. All right, first up is AAOI. We broke through support last week, unfortunately against my prediction, and that resulted a plummet down to the 38 region, touching on the 200-day moving average and getting near to this support line here down at 36. So overall, not good. I would have liked basically anything else other than the result that we got. We're leading in almost to earnings, which are just over a week away, so it's setting up for an interesting week where people decide whether they want to take the chance or get out while the getting is moderately okay. And that's what we're looking at. Now, from this chart, it's not really clear what it might do, although when we look at the 2 hours, it looks like we're leading into at least a short-term drop into the 37 region. I don't expect that this support line is going to hold if some of the others have given away in the short term. Now, what does that mean programmatically? Well, let's compare to my algorithm. So here we have the last week. So this is what it did. And then we have our support and resistance points, depending on which side of the line you're on. If we look at it here, we have this support boundary that it's just been hammering on all week. This is where if it breaks through, unfortunately, we're going to have a little bit of a tumble. And if it can hold it and start to resume an upward momentum, then we could start to get into chasing some of these resistance lines up here. Now, what do I think? I think it's, as I mentioned, probably going to take a short-term dip down below that line. And if it does, and there's some momentum to it, it could chase it all the way down to kind of the just about 34. Now, I expect it's going to really more end up in the kind of 36 region. That's my prediction for the week. But if it did turn around a little bit on the high side, so people got some momentum thinking that it's oversold ahead of earnings and really encouraged by, say, Amazon and how much money they made in their cloud computing, they might think it could chase that run up. And so in that case, it could get back up into the 42 region. But I really wouldn't expect it would do anything more than that. And that's kind of my prediction of the week. I think probably 36, even though I would like better. Then for Disney, this is a stock where I've gotten the prediction right 2 weeks in a row. So not a lot of luck with AOI. And I think that's just because there's an element of the fact that I'm invested. So I'm mentally optimistic. With Disney, I would like to be invested, and unfortunately, I stopped out a little while ago. And so it is in a parabolic move. It did meet my recommendation of going up to 112, chasing 114 again, and I think it could still keep going. There's a lot of momentum there. It's a good company. There's a lot of positive things to look at the chart. It really just needs to defeat this upper resistance line. Now, what does that look like programmatically? Well, we have our movement and the subtraction here, and then we have some areas of support and resistance that are marked out programmatically. That kind of results in the next 5 days, so 5 days of lines, that this is our major support line that it just rubbed up against or close to. This is our secondary support area, and this is kind of our main resistance line, that 116, high 114 region. And so for this one, I think it could definitely chase it. I think the low side really is that it really more maintains that level. And I think it's still going to maintain that parabolic movement at least for another week or part of the week, chasing into that 116s. And at that point, I would probably look at shorting it or at least getting out while the getting's good. If it did take a tumble, so something happens over the weekend here, then it could chase that 110 mark. I think that's really more of an extreme circumstance. That's why this gray line, the sort of less, the second bearish line, the minor bearish, is really flat actually on the resistance or the support line. I always mix them up. Now let's get into Netflix. Netflix has been taking a tumble since earnings. It is sitting on that support line there. It has another support line kind of edging towards the high 340s, kind of low 350s. And I had an option out against this, so I made a little bit of money because it timed out. So I got a little bit of coin. And now we're looking for the next week. So I think this could potentially take another tumble. So this is our areas of support and resistance, you might say, but you don't have any red points here in the middle to indicate your resistance, your support. I mixed it up again. Your support line for it. And I know it's there. We saw it just on the other graph. It's just that how they're computed is a combination of averages. And so we just, because those extra points have been hammered in recently, I don't have them in the system yet to really get a value off of. But they're there and they're represented by that yellow line. Then we have an area of resistance here up nearing the 370 mark. And then potentially, if it carves through that area of support here, we could take a tumble down to 340, which wouldn't be good. It's not necessarily what I think will happen. In the short term, though, I do think it's going to continue to go down, but I think it's nearing the end of its run down. I think it could. I think maybe 340 is a little bit too aggressive, but I think it could certainly get into 345 or low 350s, and then recover sort of over the end of the week. So that again, my prediction is probably more on the minor bearish line here of in the 350 territory. Now that's based on IT or just social media stocks continuing to get hammered and some of that impact that might have. If it does take a run at a recovery, which it looked like it was going to do this week, I think it's going to chase probably more the 365 region. If it did blow by that area of resistance, we can see that it has a good run to 375. I'm not optimistic that that would happen this next week, but you certainly never know. I think in the short term, it's going to be a little soft. All right, those are my predictions for the week. Thank you for watching. The summary here is AAOI needs to find the bottom. So I think it's going to go around 37. Disney, I think it can continue chasing 116. I think for Netflix, I think in the short term, it's more of a 345 to 350 stock with a recovery later. And I will certainly be looking to get into it if it does get into that 345, 350 region. Because even though they didn't quite make their metrics. I think it's for completely different reasons than some of the other social kind of stocks, tech companies. Okay, that's it. So thank you for watching again. Here's some credits as well as the last recap video. See some of the improvements I've made to some of these algorithms, as well as the last prediction. Here's the obligatory disclaimer. This is all under development and changes quite frequently, and those changes might result in different results and outcomes. So please just consider this an opinion and another arrow in your quiver as you make decisions. If you go to my last results show for last week, you'll see that I've changed quite a bit already to better account for that prediction of AAOI, and I think that'll really pay dividends over the long term. And now we're going to see over this next week what we get. So appreciate you watching. Please subscribe. Talk to you later.